Okay, let's talk savings in August 2025. In a moment, I will get to the top paying accounts, so you can get as much as 7.1% out there. But before that, I want to take you through some new accounts and some updates that are worth discussing. And the first one here is around that Bank of England base rate cut that took place last week, reducing it from 4.25% to 4%. Now, this has had an immediate impact on many easy access accounts, particularly those which are known as tracker rates. These literally track the Bank of England base rate. So when that has fallen by 0.25 percentage points, so has the return you'll be getting from those accounts. And there are some big names there, and big names in terms, not necessarily the high street names, but ones which have been very competitive, offering some very high rates or features which you may well have signed up to thinking you're getting something, but actually it's less. And that includes Chip and Tandem. That includes Chase as well. And another new addition to this list is Trading 212. It's Cash ISA converted last month from a standard variable rate Cash ISA into a tracker one. So all of those, if you have savings with those banks, those saving providers, you will be getting less as a result. You'll be getting 0.25% less. That's not to say other accounts aren't also reducing them. Many of our easy access accounts are standard variable. They can change at any time by however much they want to. And yeah, many of those, if they haven't already, in fact, some of these did this before the Bank of England even announced the cut, if they haven't already reduced rates, you can expect the vast majority of them to do that. There will be some exceptions, and I'll talk about some later on, which are offering a lot more to try and entice customers in. But again, they too are variable. They could change as well. Unless they're fixed, these things can change at any time. So what do you do if your savings are falling right now? Well, obviously, you want to shop around. You want to compare the rates with what you're getting, with what you could get elsewhere. BeCleverWithYourCash.com/savings has all the updates on that. And again, I'll take you through some more in a moment there. But a few things you do need to think about. If you are with one of those banks, again, talking here mainly about Chase and Trading 212, but other banks do this as well quite a lot, which have an introductory bonus for the first year. Even with this cut, you might still be getting something that's quite competitive, right? So again, when you're comparing them, while that bonus is still running, often for 12 months, or there was a period a while back, start of this year, where there were 3 months, just work out, is that bonus still going, and does it actually make it better than the underlying rate that everybody else is getting, okay? So find out about that. It could be worth sticking with them despite that cut. And the other thing is, when you are looking at these other rates, obviously I can tell you what things are paying right now, but not all of them have said if they are going to make some changes. And you might find that it takes a couple of days, if not into next week or later, for some of these banks to decide to move their money down. So I wouldn't jump to go, right, well, I'm now only getting 4.1%, but that one's offering me 4.4, moving all your money across. And then to find that 4.4 is also going to be reduced down to a similar rate. So maybe start looking at what you're getting, looking at what else is out there, and just sort of hold fire before moving across. And of course, the other things to think about here, if you're moving money, is how much you have and what the difference in rate is. There's no point, in my opinion at least, just moving your money every single time there is a rate cut to something that's pretty similar, because if we're talking about 0.1, 0.2% difference on £500, £1,000, it's not going to add up to much over the end of the year, the time you're putting into converting stuff. Now, obviously, if that difference is larger, if it's 0.5%, if it's 1%, if you've got tens of thousands of pounds, then it can make a big difference, and it is worth thinking about it. Right, now let's talk about the government and their plans for savings, because a couple of things have happened since our last update that are worth talking about. And the first one is around that rumoured cut to Cash ISA allowance. I've covered this a number of times, and each time I've covered it, I've said, I don't really think it's going to happen just yet, if anything happens, and there are going to be ways around it. In fact, it probably won't impact many people. That key rumour there was cutting the Cash ISA allowance to £4,000. Some people talked about 3,000, 5,000, 10,000. Some people talked about getting rid of it completely. But broadly, we were expecting something to be announced along those lines in mid-July. It didn't happen. And a lot of that is down to a huge amount of backlash about the reason the government were talking about doing this. And they were thinking about doing it because they thought if people have less tax-free cash to save, they'll instead invest it in tax-free stocks and shares ISAs. And that in turn will hopefully not only give them longer and better returns over the long term, but hopefully boost the UK economy. Of course, it doesn't quite work like that. Just because you say people can't get tax-free savings doesn't mean that they're going to suddenly go and do tax-free investing instead. So what the government have said is they will continue thinking about this. So it's not to say this is completely dead in the water. It's not going to happen. I'm pretty sure they will make changes to ISAs. They will make changes to savings in some way, because they need to earn more money, to generate more money through taxation in some way to fill some of the spending gaps that they've got. I would imagine we'll hear something around the budget, and that's probably going to be late October or early November. And anything they announce then, this is what I said last time, anything that's announced in this financial year, I can't see how it will come into play before April of 2026. Again, this is all still speculation. We don't know anything for certain right now, but it does still, although nothing's happened right now on that cash ISA allowance, still to me would be a good idea if you have the money to put it into your cash ISA just to maybe protect that allowance just in case it disappears in future years. Obviously, if you need to spend it, that's different. But if you're saving for longer term, not even your cash ISA allowance, just your ISA allowance, could be in stocks and shares, could be a lifetime ISA. It still makes sense to be doing that until we know any more. And once we know any more, I will obviously let you know. Sticking with the government, you might also have seen headlines in the last few days. One I saw was talking about Rachel Reeves's new way to tax savings, which, okay, if this cash ISA thing isn't coming along, what does this mean? Maybe they'll come after that personal savings allowance, that tax-free amount that basic rate taxpayers can earn in interest every year before tax is due outside of ISAs and premium bonds. Or maybe some other way they're going to try and tax the money you're earning in savings. Well, actually, it's nothing of the sorts. These headlines are just trying to sort of generate, clickbait and get people a bit panicked and worked up. All that is happening, and this was first reported from the Telegraph, a few other people have picked this up as well, is that from 2027, you will have to provide your bank with your national insurance number. Now, many banks will take this already, right? But not all of them do. But if you give your bank your national insurance number, that means HMRC can properly track how much interest you're earning in a year. And then they can go, all right, okay, this person has earned £1,500 in interest this year. They've only got a £500 personal savings allowance because they're a higher rate taxpayer. That means there's £1,000 of interest that we need to tax. So they know exactly what's going on, because right now there's a bit of a gap, apparently around 20%. I've seen various figures here, but around 20% isn't reported each year under the current systems. And not only do they know exactly how much people owe and who owes it, they're then going to claim it straight back from your pay. So this, if you don't pay this for whatever reason, you work around it, it is tax evasion, so you shouldn't be doing it anyway. So this is a perfectly legitimate thing. It's not a new way of taxing people. It's just maybe a new system to ensure that that tax is paid. I've seen also a few commentators saying this is going to take a lot of time and money to actually make work. So maybe we'll see if that 2027 date actually comes across. But that's all that is being talked about there. Now, a year ago, I shared with you a pretty rare and pretty fantastic 10% paying savings account. It was a regular saver from Virgin Money. It wasn't around for long, less than a month, I think, in total. If you did open it up there, here's a heads up, because that 12 months, that initial period where it was available for, has finished. And your money that you deposited and all that interest, that 10% interest that we added, would all have been moved into a separate savings account within your Virgin Money account. And that will not be paying much at all. So this is my kind of reminder for you to go into your app or your online banking and transfer that money out into a different account, one that is going to be paying a lot more than that. Now, if you don't need to access the cash, then potentially you want to look at a fixed rate account. The rates here, obviously lower than they were a year ago, lower than where they were 2 years ago, but they haven't moved around too much, the longer fixes in recent months. So you can get an okay rate there, but it's locked in. It won't go down if we see more base rate cuts in the future. Another option you could look at here is putting it in a top paying easy access account and then drip feeding it into another regular saver. Again, these are the ones that are paying 7% as much as. When I've looked at this before, the maths obviously changes depending what rates you can get everywhere. It wasn't too much different really. So I'd personally be thinking about maybe locking it away and then any new money you've got coming in, using that to feed into the regular savers. But you can work that out for yourself, what is the best option. Now, when it comes to regular savers, there are two in particular that I want to talk about. I'll tell you about the rest later on, but these are new ones. The first one is a new issue from Virgin Money. Sadly, it is not 10%. It'd be too much to ask, wouldn't it, that we get such a good account 2 years in a row, but it's still pretty competitive at 6.5%. Now, remember, with a regular saver, you can only put in a certain amount every month, month after month after month after month. So in month one, you put in for this Virgin Money account in particular, the max you can put in is 250 quid. So you would get 6.5% on that for a full year. In month two, you can add another 250 quid. Well, then you'll get 6.5% on that amount for 11 months out of the year, because these last for 12 months broadly, and so on like that, okay? So that's where people get a bit confused about regular savers. Got a whole video and article taking you through more about exactly how they work. So if you're a bit confused, check that out. But anyway, still a really good rate. What I also like about this one is that it is a fixed amount. So it cannot change during the year. So you will absolutely be getting 6.5% for 12 months. Actually, a little bit more than 12 months if you open this up, because it doesn't expire until the end of August 2026. But I'm pretty confident here that this will be pulled for applicants on the 28th of August 2025. So you've only got a couple of weeks to open this up. You do need a Virgin Money current account for this as well. One that doesn't require a current account, and this is pretty rare, is from Monmouth Building Society. Now this pays 6%. So yes, although you can get higher than 6%, this is a good one because you do not need to get a current account. Okay, you can just open this up without that extra admin. Now, opening up extra current accounts for regular savers, I don't think is always a bad thing to do. But if you don't want that little bit of faff, this is a good one to look at. What I also like about it is a £500 a month in deposit. That's one of the highest ones out there. So if you have £500 spare every month, you put that in, and after a year, you'll be getting a pretty decent return versus if you just put that £500 into a lower paying account each month. However, a warning here. I've applied for this. I have to do it via the app unless you live near to one of the branches in Monmouthshire. You have to do it via the app. And when I had to link an account to it, I tried to link Starling and it didn't recognize Starling, which is a bit of a weird one considering that Starling is obviously one of the biggest sort of digital banks out there. So I had to phone them up to try and progress it, send them a copy of my bank statement. That should have fixed it. It hasn't. So I've got to call them back again to see if they can fix that. But I imagine if you're connecting it to maybe connected to, like, I don't know, a Barclays or a NatWest or something like that, hopefully it'll recognize it and you can sort of move on with it. I've got another new account to tell you about. This is from Virgin Money. In fact, it's not a new account, but it's a new rate they're offering. But this is for any children you have. So if you have a Virgin Money current account, you can open up the Virgin Money Empower Kids bank account. It's for children aged between 11 and 15. And then when they do that, they also open up automatically a linked separate savings account. And this is paying 5% on balances of up to £5,000. So in terms of children's savings, this is one of the best options you've got out there right now. Certainly worth a look. A couple more rate cuts to give you a quick heads up on. One of them is the Barclays Rainy Day Saver. Now, this will be the third cut that has happened this year from the heights of that 5.12%, which it did for a long time, which made it one of the most competitive ones out there. It is now offering just 4.36%. Now, when these cuts have happened before, I've said to you guys, look, it's worth moving your money elsewhere. But some of you might have kept it. This is just another reminder. It is not fantastic. And another reason why it is not fantastic, and another reason, not just that rate can be beaten elsewhere, is that if you are getting the Rainy Day Saver via the Blue Rewards add-on, you are paying £5 a month extra every month in order to access this savings account. Yes, you get Apple TV for free as well, but broadly speaking, purely looking at savings, the best you can get with Rainy Day Saver, if you are paying this £5 a month, is 3.08%, which can be easily beaten in loads of places. Of course, if you are getting that Rainy Day Saver via the Premier Bank account from Barclays, then there is no fee and you will be getting that pure 4.36% on balances up to £5,000. But again, broadly speaking, I think you're better off just moving your money elsewhere. Of course, if Barclays Premier is your main account and you want to keep some savings in the same app, then maybe stick with it, because as we've seen other rates drop down, then maybe it won't be as bad, but certainly it still can be beaten. Another cut that took place this month was the premium bond prize rate. That now pays 3.6%, which is pretty rubbish, right? We've seen a number of cuts down this year. And remember, with premium bonds, you are not guaranteed to get this at all every single month. You could get much, much less, particularly if you don't have anywhere near that full £50,000 that is saved in there. So again, I would think about moving your money out of premium bonds. But because we're now, 11th, 12th of August, third of the way through the month, you might want to wait until the start of September, because if you take your money out now, not only will you missed out on the chance of winning anything in September's draw, you'd also would have missed out on any potential interest over the last 10, 11, 12 days. So potentially wait until the start of September. You would have qualified for the draw there, any prizes there, move your money out then and put it in a better paying savings account. And I've also got a kind of another nudge when it comes to premium bonds as well, because NSNI, National Savings Investments, who run premium bonds, they've revealed that 2.5 million prizes have been unclaimed, sitting there worth more than £100 million. Now, to be fair, this does go back as far as 1957. That's the oldest unclaimed prize. So some of these people might not necessarily be around as much. But if you've got premium bonds, or you think you might have had premium bonds, it's certainly worth checking. Now, if you've got an account, you can log in and you can easily see all your prize history. And essentially, if they haven't already been paid out to you or reinvested, you'll find out how you can access them. If you're not sure about it at all, then there are details on the Premium Bonds website about how you can get in touch with them, effectively trace them and see if they can give you the details for those bonds so you can get access to them. There is also something called My Lost Account, which you again could do a similar thing, find out if you ever had premium bonds, and then once you've got those details, you can put them into NSNI and they'll tell you if there are any prizes that you can claim. Okay, so let's have a look at the top paying savings accounts right now. With that caveat, as I said, that some of these rates could still change in the coming days with all that volatility we've got going on after that base rate announcement last week. Remember, becleverwithyourcash.com/savings is where you will find updated tables across all the different savings types from myself, Amelia, and the team. We're in there twice a day, if not more, making sure they are fully up to date. So head up to there just to check if anything else has gone on. But this is a good snapshot of what you can get. And if you're fast, you might even get these ones too. Let's start off though with what I think is one of the best paying accounts out there. Top pick for me if you have a smallish lump sum of cash that you want to save. And this is the Santander Edge Saver, paying 6%, only for 12 months and only on balances up to £4,000. But again, for a lot of people, that is plenty enough for the money you need in easy access savings, stuff that's not locked away elsewhere. Now, the caveat with this one, the catch with this one, I'm sure you guys know this because I've mentioned this quite a lot. This one does require a current account. It requires a Santander Edge current account. That in itself comes with a monthly fee. You pay that fee, it knocks into the interest you get, doesn't make it as worthwhile. But as long as you pay your core bills, so your council tax, your energy, your water, your broadband, your mobile, from that account, it should cover that fee, wipe that out, give you a small little profit on top, but give you that full 6% on that Edge Saver. And a little hack here, if you are in a couple, you open up a joint Santander Edge current account. So there's only one fee to be covered, but you get to open up an individual Edge Saver each. So that's £8,000. You're doubling the amount of money you can put in there and get that top 6%. Impossible to beat that on a lump sum right now. The Nationwide Flex Direct current account works in a similar way, although you earn the interest in the account itself. That one pays 5% only on balances up to £1,500. Personally, I wouldn't be bothering with that one, but if you are interested, that's worth knowing about. You might also still, for the next day or two, see that Chase is offering brand new Chase current account customers the option to get a 5% paying account. That will drop in the next few days because that is a base rate tracker, so that will go down to 4.75%, although not necessarily a bad option if you are eligible when you look at what you're going to get elsewhere. And let's do that. Let's look at the other easy access accounts and limited accounts if you do have a larger lump sum to put aside. Well, the first one of these is restricted again, but does not require a current account. This is from Kahoot, which is part of Santander. This is their Sunny Day Saver. That's offering 5% on balances of up to £3,000 for a year. This one also has that hack where you can open up one as an individual, one as a joint, and also your other person can get also one as an individual account as well. So potentially that's £9,000 you can get that 5% at, which is obviously pretty decent right now. A larger amount at the moment, this could change, is with Kahoot, 4.55%. The same rate is from West Brom Building Society. That one is a limited access though, so you can only take the money out 4 times in a year before that rate drops. And then we have Synergy, 4.45%, with no restrictions in terms of length or the number of withdrawals. But again, these are the ones that potentially could drop down in the coming days or weeks. So keep an eye on our tables for updates there. ISAs, however, easy access ISAs, we have seen some movement already there. The top paying one at the moment is an interesting one. It's from CMC Invest, 4.59%. So that's pretty attractive. What you have to be careful of here, or aware of at least, is it doesn't have the full financial services compensation scheme protection because the money held there is held in something called qualifying money market funds, in the same way that uninvested cash is held by the likes of Trading 212 and others in their stocks and shares ISAs. So it has some protection, but not the full one. So if you are going to go for this, you'll want to do a bit more research into it. Then in terms of the normal pure cash ISAs, which do have that financial services compensation scheme protection, Moneybox is the top here, but 4.45%. Then we have Trading 212 at 4.42%. Now those rates are only for new customers. So if you've already got an account with them or previously had an account with them, you will get a lower rate. So if you are looking for a new ISA that would work for you in that sense, because you've had those accounts before, the top one right now is Charter Savings at 4.4%. Again, a lot of movement going on here. Recording this on Monday, before I'm about to hit record, we actually had Tembo at the top there, but they have announced that they're going to change their rates on Tuesday morning, which means they go off the top to much further down. So again, a lot of volatility going on here. Also worth keeping an eye on those notice accounts going around, which if you don't need to access money straight away, could be quite competitive compared to what else is on at the moment. RCI is given a 3-month notice account at 4.7%, whereas Stafford Building Society is given 4.61% for 180 days notice. That's 6 months. Okay, out of the way of easy access, we're now onto fixed rate ones, which again, you don't need to access your money. You are locking these rates. You are guaranteed these rates. The best 6-month fix right now is from Aldermore, 4.63%. The best 9 months is from GB Bank at 4.5%. Then we have 12 months. We have Vanquis at 4.44%. And then Synergy for 18 months at 4.33%. Then for 2, 3, 4 and 5 year, the best rate fixes right now are all from JN Bank, ranging between 4.45 for those 2 and 3 years, 4.4% for the 4 year and 4.52 for the 5 year. Interestingly, other than the short term under 1 year and under fixes, the other ones have nudged up a little bit since last month's update. And that's partly because they don't anticipate to see the base rate dropping as much or as quickly in the coming years. So it's still lower than where we were, but they're not bad rates to go for. If you'd rather put your money in a fixed rate ISA, then the best ones right now are for 12 months is Chetwood Bank at 4.31%. And then the 2 and 3 year ones are with Shawbrook at 4.21 and 4.22% respectively. UBL for a 4 year fix, given 4%, while Shawbrook, again, for a 5 year fix, 4.25%. Finally, let's talk about regular savers. Now, there is one that I'm not talking about here, which pays 7.5%. That is from one of the building societies, but it's only for 6 months. So yes, headline-wise, 7.5% is technically the highest you can get, but I personally wouldn't be bothering with that one. Instead, the one I would go for, the one I think is the real top of the table here in terms of the rate, is Zopa's regular saver at 7.1%. This one requires a Zopa current account known as Biscuit. We've covered that very recently on the website, the podcast, and the YouTube channel. Has got more details on that. That is a variable rate one with up to £300 a month. My personal top pick, though, is one that pays slightly less than that, and that is from First Direct. That is a 7% rate, so a little bit less, but it is fixed. You are locked in, so you are guaranteed to get that rate. You can pay in a maximum of £300 a month, but again, it requires a First Direct current account. The other top paying ones, Cooperative Bank, their regular saver is 7% as well, maximum £250, but this is variable, so it could drop, and it does require a Co-op Bank current account. And then we have Virgin Money, as I talked to you guys about earlier on, 6.5%, maximum £250 a month, and requires a Virgin Money current account. Obviously, if you don't want to open a current account, as we mentioned earlier on, there is that Monmouth Building Society one at 6%, which is certainly worth a look. But if you don't mind a bit of admin, I'd be looking at those options here before that. So that is it for the August 2025 savings update. Remember, becleverwithyourcash.com/savings is where you will find all our top accounts. Plus, we have other pages on ISAs, lifetime ISAs, junior ISAs, and regular savers. You'll find them all over on the site. My name's Andy Webb. Thank you so much for watching. Check out these videos here for more ways to make the most of your money.